Have here. I will do my best to fill in while we're waiting for this. I think we're almost there. Are we? Or should we?
Yeah, good now.
Good? Okay.
Yep.
Good evening, ladies and gentlemen. Welcome to the LSE. My name is Ian Roxanne from the Department of Law. With the election just around the corner, we thought that it was an opportune moment for the Department of Law, as part of our taxation seminar series, to present some expert opinions on the leading tax policies being offered by the parties in their manifestos. Our chair for this evening is Torsten Bell, Chief Executive of the Resolution Foundation, and I will turn the event over to him.
Thank you very much, Ian, and for the people who have organised this, who seem to have left as the IT collapsed, which is very sensitive, but they've done a lot of work. So we should say well done. I was going to start, I'm not sure this is meant to be nice or not, but saying everyone's a bit odd being here, because you're odd in at least two ways. One is nobody wants to talk about policy in the last 10 days of an election campaign. I've been involved in quite a lot. By now, the media definitely doesn't. Almost nobody else does, and the politicians definitely don't, so that makes you weird. And on top of that, you want to talk about tax, which gets you into the doubly weird stakes. And then I was reflecting why people were turning up. And then I thought, well, it is cold outside, there's an election on, and Donald Trump is in town, so this is probably like a safe space for us all to camp out. Now, just briefly in terms of what we're going to do today, because we have got a lot on. These two full rows are full of speakers that we're going to hear from, and then there's quite a lot of question rows to get through. So first of all, there's a bit of housekeeping. So as you've just noticed, this thing is hopefully going to be streamed on some kind of YouTube channel. Don't say anything illegal, rude, things you'll regret later when your children see it. You can apparently tweet about this on the hashtag LSE Tax, which apparently is on the screen here and here. I have no idea where the toilets are, but just go outside the door, make sure your phones are on silent. Right, then the more interesting stuff. So we're doing 5 panels today. We're aiming that these will last 20 minutes each, to give you a heads up in case you don't want to stay for all of them. You get taxes on work first, then we're going to do business, then we're going to turn on to the wealthy, which is obviously not related to either business or work. Then we're going to turn to environmental and indirect taxes, and we're going to finish on tax avoidance and evasion. We'll get to the really illegal stuff right at the end, and then if we have still got time left, we can have a general discussion about what is going on. Just big picture before we kick off with work, just to give the work panel about 10 seconds warning. Like compared to most election campaigns, in most people looking around the rooms, living memory in this country, the scale of difference on tax proposals on offer is large. So this is not a tax tweak election, or at least one party is kind of quite close to tax tweak, but generally there's a big choice on offer. So at least it is, despite what I said at the beginning, it is probably worth talking about tax and this election. So that's the good thing. Right. Now, to introduce our first panel, who are all going to be held to 5 minutes each before we get to questions. Susan Ball, partner at RSM UK, and then Stuart Adam, senior research economist at the Institute for Fiscal Studies. Everyone I'm going to introduce has really long, great CVs. I just can't read out all of them for this whole panel. So, to kick us off, Susan, 5 minutes, over to you. Now, remember to hold just questions, no opening statements at all. Oh, right, well, brilliant. We're going to be able...
I was panicking.
Guys, like, their stress levels are down, and the odds of us actually finishing on time have gone up by about 100%. So that's great. Okay, brilliant. All right, then why don't we then kick off with you, Stuart, which is over on these slides are a summary of the main two parties' proposals on work. I'm not going to read them out because I'm told that LSE students can read. So here they are. This is them on both sides. So we're going to focus in a second on the Conservative Party main proposal, which is to cut national insurance. Just briefly before we get to that, I'll probably come back to this one as it's the main parties in a second, but these are the detailed proposals in this area from lots of the other parties. The big one from the Lib Dems is the 1p rise in all income tax rates. Other ones that probably stand out, I mean, the Greens have got all kinds of stuff about universal basic income, but they're not going to win, so we're going to not dwell on that. Right, back to the questions I'm going to actually ask you about. So, Adam, increasing the national insurance threshold, good way to help low-paid workers, or rubbish way to spend money?
Yes. So, if you want to help low earners by cutting taxes, it's about as well targeted as a tax cut can be on low earners. but that's still not very well targeted. We make it that about 8% of the giveaway goes to the lowest income 20% of working households. Only about 3% of it goes to the lowest income fifth of all households. And that's partly because some people don't earn enough to pay national insurance, but it's also because those people who are on housing benefit or universal credit would get their benefits reduced as their after-tax income goes up, and because households with two earners benefit twice over, and they tend to be better off. So if you wanted to target low earners, you can actually do it much more accurately by increasing in-work benefits. So something like the work allowance and universal credit, about 2/3 of that would go to the lowest income fifth of working households rather than just 8% of it. The downside of that, of course, is that you're then extending means testing to many more people with all of the disadvantages that brings.
How much does it cost?
About £2 billion.
And what do I get, given that all we really care about is free tax advice here?
So it's at most £85 per worker from the initial plan to go to £9,500 threshold next year. Again, if you are on means tested benefits and get some of that clawed back, you would get less. The Conservatives have said their long-run aspiration is much more ambitious, to increase it to £12,500, which is where the current income tax personal allowance is. That would be much more expensive and much bigger gains for those affected. Quite how big a giveaway that is depends on when they do it, because the threshold goes up with inflation every year anyway, so how big the additional increase is to get to £12,500 gets smaller and smaller the longer you leave it. But in any case, they haven't given any time scale for that. It's not a firm commitment. They haven't said how they would pay for it. That is just an aspiration. So at the moment, we are talking actually pretty small giveaway.
Small beer, good. Everyone likes small beer. Right, Susan. So on Labour's plan, the bit that they want to talk about, which is the top of this slide bit, which is saying we have a big plan, we're going to raise tax from the top 5% of earners, which is a small amount of the overall tax rise, which is about £83 billion they want to raise. I think this brings in about a bit over £5 billion. But what of it, what's going to hurt people that are lower earners than the top 5%?
On the lower earners, obviously the abolition of the marriage allowance is going to help, hinder them, because that's going to impact them. I think it's about £250 per annum, which obviously for a low earner is a significant amount of money. And that
for the unmarried in the room, do you want to remind them what the marriage tax allowance is? They're all very young, so they don't know.
Off the top of my head, I think it's 1,100 now.
So this allows married couples to share elements of their personal allowance in the income tax system between two earners if one of them, i.e. the second earner, doesn't use up all of their, doesn't earn more than the 12.5 grand.
Just been corrected on it. Slightly £100 out there.
That's
Do
right.
my maths quickly.
You're amongst friends. Is there any other ways? I mean, we're going to come back to dividend and CGT later, but is there just touching on those in the ways they most directly relate to
Significantly to the lower earners, or?
Yeah. How can I be low income and pay more tax under Labour's plans? I'm thinking about some pensioners with some shares, or as an example.
Okay, well, in relation to those, if you've got pensioners with some form of dividend income, then obviously that would impact them. So that would be an issue for the lower earners that wouldn't have been previously because of the dividend rate change.
Now, for both of you, then, it can either be from this list, although if you want to go really rogue, you can have one that isn't on this list. What's like one tax reform in this area you'd actually like to see happen? Come on, kicks off.
Okay, I'll be traditional about it. Let's see proper integration of income tax and national insurance.
That is very worthy. Not going to happen. Right. Susan, go a bit more kind of rogue. We don't want this worthy stuff. Come on.
Because I was going to say that actually at the moment, one of the debates that I would like to see kind of work its way through the system is more around the pension aspects. Because I think we've obviously seen a lot of reports on the difficulties the pension rules are having for those individuals who are making contributions, but also for those who are impacted by the way the pensions tax comes in. And I think perhaps we could start again, maybe with that. Maybe that's radical.
Are you talking about the very top here? Is this like you? Is this bleeding hearts for doctors? Is what we're on here?
It's not just bleeding hearts for doctors. It's also about the fact that we have problems with relation to those that get tax relief on pensions at the lower aspects of it, depending on what type of pension scheme in, depends on whether they get tax relief or not.
Yeah, absolutely. Okay, so we'd like some lower earners to actually get some tax relief. That's a good idea. We'd like them to have some pensions. Okay, very good. We're going to move on to taxes on business. You two are complete winners in the. No. Oh yes. Do you guys want to ask questions? That's not very enthusiastic. No one? Right, come on. Let's have some questions from the audience. The gentleman here, who press and hold.
So the Conservatives want to raise the threshold for national insurance contributions. Is there any indication they might want to increase the lower earnings limit, which takes people out of contributory benefits at the bottom?
As far as I'm aware, they haven't said that they would want to.
Because that's one way of clawing back some of the benefit, right? If you take people out of benefits, then inevitably it saves some expenditure.
Yeah, you could do it. So far, I mean, the reason that the lower earnings limit is at the moment different from the point at which you start to pay national insurance, and again, sorry for the benefit of those who aren't immersed in it, the lower earnings limit is how much you have to earn to get entitlement to contributory benefits. So to earn entitlement to state pension and unemployment and disability benefits and things like that, you have to be earning above the lower earnings limit, and that's below the earnings threshold at which you actually start paying national insurance. Now, up until the late 90s, they used to be the same. The reason that they became different is because the government at the time wanted to increase the threshold for paying national insurance, but they didn't want to start depriving some people of benefits. And therefore, they increased the threshold for paying national insurance, but left the point at which you were entitled to benefits. And I think the rationale for why they separated them in the first place would probably still apply. I am not sure that the Conservatives would necessarily want to start depriving the lowest earners of their benefit entitlements. As far as I'm aware, they haven't said they did, but would. But of course, yes, if they did, that would save them some money.
They're definitely not going to do that. Because they'd be taking a load of state pension off some very low earners, and they're not suicidal. It doesn't actually matter much for universal credit because there's so little left. So a bigger picture for a second, there's so little left in the tax and benefit system that is genuinely contributory. Even on the state pension, it's kind of a tick your years and you get your flat rate now. So basically all you would be doing is taking a very big chunk out of some low-paid, particularly women's state pension. So that would be it would make the WASPy campaign look like a walk in the park, and already that might cost us 58 billion anyway. So I think it's unlikely to happen. But the Conservative Party maybe they've got like a really brave thing coming. Now, any other questions from this side? Come on, Tony, you've definitely got a question. Which of these is your fault? Tony was in charge of the tax system for years. It went really well for him. Press the button, Tony. Press the button. And tax credits, particularly when it went really badly at the beginning.
Yeah, I was slightly surprised by your wish list. I would have thought one of the things you probably want to get rid of, certainly the IFS would probably want to get rid of, is the clawback of the personal allowance on incomes above 100,000, which is one of the most striking aberrations. The marginal tax rate goes up to 60%. But you may have been partly responsible for that, or some of you were in the right place. Had you left by then? I'd retired, yeah.
Okay, yeah, no. So I am responsible for that one. It's not a classic as policy goes, but there's worse. We're going to come on to entrepreneurs relief later. So I've done worse ones. Anyway, go on. Do you want to justify yourself? Come on, Stuart. He was attacking you, so you may as well answer.
Yes, I would absolutely get rid of that, smooth it out. I was only asked for one. That would have been my second. Pensions tax relief might have been my third.
Okay, fine, okay. You're not allowed 10. Okay, and anyone else? Before we move on to business? Come on, this is the bit of most of what was going to come, unless you're loaded in this room, isn't really going to affect you. So anyone? Bit of apprenticeship levy? Yes. Yes, question in the back of the middle.
If we look at the Lib Dem policies, we've got the Lib Dem policy of raising 1 percentage point or 1 pence on every income tax band. Does that seem to be sensible policy about spreading tax, or is that bad policy?
It's very unfashionable to be in favour of broad-based tax rises. So, do you want to defend them or attack them?
Well, okay, it's a pretty straightforward way to raise pretty large amounts of money. So, you know, the 7 billion that the Lib Dems would get from that is considerably more than Labour would get from its much bigger tax rises just for high earners. So, it does get you quite a lot of money in a relatively straightforward way without creating a lot of the problems that other more complicated tax policies do. It clearly isn't as targeted at the best off as particularly some of Labour's policies are, although it still is actually much more progressive than people often realise. It's still very much the top of the income distribution that ends up paying most from it, even as a percentage of their income. In the end, it's partly just, it's a question of priorities. And if you just think in terms of the approach and the messages that the different parties are sending, the Lib Dems are sending a message of, well, we all need to chip in a bit more for better public services. Labour are very much trying to send a message that the people that ought to be paying more tax are the well-off and businesses, who aren't all the well-off, but that's a topic for the next panel. The Tories, of course, aren't proposing any of these things, and they're basically saying, vote for us if you're happy with the status quo. Take your pick, but it's definitely a choice.
Let's just take one last final question on this broad area, but which is, how much would any of this change how people who work for themselves pay less tax than employees? Which is obviously for those of, again, not spending their whole lives in this area, one of the turkeys of the UK tax system is that we charge very different tax rates to people doing pretty similar work, depending on whether they claim to be self-employed, are incorporated, or look like a bog standard worker. So, Susan?
We were just having a debate when we started here about whether I could not mention IR35 today. Because I seem to be mentioning it a lot, and obviously all of the major parties have come out either in their manifesto or actually publicly and now said that they would like or will consider reviewing the rules. Yes, so shaking of the head there. My opinion is that a review means we've still got draft legislation, we need final legislation, and need to finalise it.
Do you want to just again remind people the joys of IR35?
Well, what we currently have, obviously, is a set of rules, what we all call IR35, which is the Inland Revenue Press Release 35. Back in the day, we had those rules from 2000, which effectively says that if you're somebody working through an intermediary, such as a personal service company, and you look like an employee in that engagement, then you should be operating the IR35 rules on yourself, effectively, and making payments under deduction of tax and national insurance under pay-as-you-earn. If you work in the public sector now, the rules changed in April 17, but that didn't change for the private sector. So the proposals that are on the table at the moment are that they change for the private sector from April 2020, which, in answer to your question, broadly would put people, if they look like an employee, paying tax and national insurance in a similar way.
Very good idea. So basically, to make that really simple, because we're not prepared to put up taxes on the self-employed, we're trying to retrofit regulations to drag people out of self-employment into employment. You can either sort your tax system out, or if you don't, you have to sort out rules around the back of it. So go on.
Yeah, so if I can just add to that, I mean, Labour's policies actually would really radically transform how much business owners are paying on their income compared to employees. Their plans for taxation of dividends and capital gains in particular, at the moment, are taxed much less heavily than ordinary income, and that's why it's financially, one of the main reasons why it's financially worthwhile for lots of people to set up as companies and take the money as dividends and capital gains rather than as earnings. And so Labour are promising a really very big tax rise on those.
You're nicking the third panels. This is their gold, seriously. They've got out of bed for this. You can't be.
Level that out.
Okay, great. Right, let's move on to taxes on business. So the panel for this tells you who they are here, but you've already met Ian Roxon. But you're also going to get Heather Self, partner at Blick Rothenberg, and Sam Dimitri from the Entrepreneurs Network. Sounds very bold. Are you going to come in later on? So we'll come back to entrepreneurs later. Right, great. So to kick us off, this is what is being proposed, again, by the main parties. Big picture, biggest change compared to previous elections is everybody now basically in favour of corporation tax at least staying the same or going up a lot or a bit, depending on. You can have whatever like level of corporation tax between now and what it was 10 years ago. You can basically have a party proposing it today. The other things that you want to note on there, everyone wants to talk about business rates because we all want to pretend we're doing something for the retail sector. In brackets, it won't. Labour wants a financial transactions tax, and the Brexit Party hasn't got all of their radical proposals on here, but again, wants some stuff. Anything else you want to flag? No, everyone's got their own rate of corporation tax. Take your pick, whatever you fancy. Right, so why don't we start on that then, which is big picture. We spent a lot of time talking about corporation tax in Britain over the last few years. So Sam, was it a mistake in the first place to cut corporation tax? Please press the button.
Yeah. When you talk. I don't think so. I think it was a good idea to bring it down to a level that's internationally competitive, but we have to remember that there's a difference between the rate of tax, the actual headline rate, and the actual rate people pay. So the actual rate people pay has hovered around 15% for the last 15 years or so. So it's not actually been that much of a radical departure in that sense. One of the issues is that while we lowered the headline rate, we actually broadened the base. And usually you'd say broadening the base, lower the rate, that's good tax policy. But this is a case where probably it isn't, because one of the things that happened were capital allowances were cut. And if we think that it's a good idea for taxes to be designed to incentivise productive economic activity, what we want ideally is to tax old capital a lot and tax new capital not a lot. What we've done is we've shifted from a system where we tax old capital and new capital at a certain amount, and now we tax the old capital a bit less and the new capital a bit more as a result. So although overall the new capital is being taxed at a slightly lower rate now, but we obviously could get more revenue and keep it the same in terms of incentives. So not entirely the way it was done, but not necessarily entirely, probably a good idea to bring it down, but we should have done it in a smarter way.
That sounds on the edge of fence sitting, but there's a lot of that in this election, so that's fair enough. Heather, what about you on the same question?
So I think it's fair to say that business didn't really expect corporate tax rates to come down below about 20%. Of course, they're going to be pleased if they do go lower, but was it really essential? Probably not. There was, however, a bit of sneaky sleight of hand when it came down. I've managed to pull up the figures from the summer budget 2015, which shows that the reduction in corporation tax to 19% and then 18% was expected to cost about $6.5 billion over the budget cycle. However, at the same time, they changed the date on which the very largest companies paid corporation tax. And guess what? That brought in $7.5 billion. So cutting the rate from 20 to 18 didn't really cost anything in budget arithmetic. And I strongly suspect that you're not going to see any change in the timing of payments if the rate goes back up again. So they gave with one hand, took it away with the other. They're now going to take it away with the other as well.
Yeah, that may have gone over to me. That was George Osborne trying to hit his fiscal rules by moving some cash payments around to show, wasn't it? That's basically
That was a bit
timing
later.
issue.
That was a little bit later when they deferred it and fudged it. Okay. But the basic one was that it didn't cost anything over the 5-year budget cycle to cut the rate of corporation tax, because they just made the biggest companies pay their tax earlier.
Is there any good reason for cutting it further?
No.
Okay. So why do we have it legislated to happen until... Well, at the moment, it is in law that it will fall to 17% in April. So the first act of a Tory government, if they happen to win, will be to pass legislation to put up corporation tax, which is quite, funny. Sorry, so...
Yeah. I mean, I'm old enough to remember when corporation tax was 52%, so, 26 seems quite reasonable to me.
Very good. Right, Ian, you'll go on that big overall question. Corporation tax, up, down, middle, and of which one are you after? Labour, Greens, they've all got rates. Take your pick. I think the SNP may now have the same policy as the Conservative Party. They're both on 20 now. That's the only thing they agree. It's the only thing they agree on. Anyway,
it may be the only thing that they agree on. I mean, if you look at average rates around the world, sort of there are about 21.405, and in the EU about the same. The OECD average is actually a bit higher at 23.5, which is where I guess the Greens get their policy from of increasing the rate to 24% to the OECD average. So the idea of bringing it down was to try and be competitive in the world. But of course, as Sam says, it involved a lot of base broadening. And it seems a bit strange that after the financial crisis, there was this argument that we ought to be rebalancing the economy away from financial services and support manufacturing. So what did they do? They cut the rates of capital allowance, which is precisely what manufacturing depends on. So
No, it might not have been a mistake to cut corporation tax rates or to broaden the base, but they seem to have done it in a way that was least in accordance with the underlying objectives. Certainly, it looks, given international averages, as though raising it a bit is unlikely to have any significant competitive effect. And as Sam says, any business that's really paying attention shouldn't be looking at the headline rate. They should be looking at what they're actually paying in tax.
Let's just go on both the parties' kind of arguments for their position. Okay, so the Conservative Party's argument is, I'm slightly over-theorising their position, but broadly, we have accidentally got to the peak of the Laffer curve. It's really good there. We thought it might be lower, but it's turned out actually we are like totally at it. So we should just stick there, with the kind of slightly odd reading of tax receipts over the last 10 years. And Labour's position is, it was 26% before, so we can go back there without any trouble, and you keep quiet about your base broadening stuff. We don't want to talk about that. It's all about the headline rate. So give us your evaluation, and don't kind of duck it. I'd like a kind of actual proper view on each of them. So which one's better or worse? Heather, come on. Give us your bold.
As somebody's already said, the Tories are more or less just leaving everything as it is. Lib Dems are not doing a huge amount of additional stuff on corporation business taxes, but Labour have got some quite significant measures which, if you add them all up, you could say they're effectively doubling the rate of corporation tax to about 34%. And the measures I'm thinking of are the unitary taxation of multinationals, which is impossible and won't raise 6.3 billion anyway, but I'll let the others talk about that later.
That's definitely off the fence, very good.
A financial transactions tax, which is going to raise 8.8 billion, except that won't work either. The fair tax programme, which actually is mainly aimed at individuals and offshore owners of property. But then there's two quite nasty stings in the tail. There's the reform of R&D funding. So at the moment, companies get an additional benefit if they spend on research and development. The proposal is to abolish that for large companies. Okay, there is a lot of what's called deadweight cost in R&D allowances, because a lot of research and development, you do it anyway because you want to develop new drugs or new computer programs or whatever. But if you just suddenly take it away, if you think of the sectors where the UK has still got some really big players in the global market, one of them is pharmaceuticals. We're very unusual in having both GSK and AstraZeneca headquartered in the UK. Do you really want to risk that sort of thing by taking away the reliefs they're getting for their R&D? The other one that worries me is they're doing an efficiency review of corporate tax reliefs. Now that is going to be set up as an independent review within a month of a Labour government and report back within 6 months and have a long list of things they're going to look at. It's a really good idea, as I'm sure Stuart would agree, to look at tax reliefs and say, are they achieving what we expected them to achieve? Are they still sensible? Do we want to keep them? But the figure they've put in is 4.3 billion. And as best I can tell, that's just 1% of total release, because 1% isn't very much. So, of course, we can claw it back. But if you look at the amounts of corporate tax relief, given they've already got rid of a lot of R&D reliefs, they're going to be cutting quite deep into the reliefs that companies get. And it does suggest they're probably going to restrict capital allowances further. So my main point is that there's a lot of additional tax raising from business in the Labour Manifesto that doesn't hit the headline rate, but when you add them up together, it's the equivalent of going to a headline rate of about 34%, and I think that is too high.
Okay, great. That was admirably off the fence. Sam, I'm guessing you're not pro like loads of these taxes, but come on, give us some Laffer curve as well. You can bash both sides.
Yeah, well,
or throw the Lib Dems in if you want.
The thing with the Laffer curve is a lot of people seem to just confuse base broadening and incentive effects. I think there is a sort of Laffer-esque point in that probably cutting corporation tax wasn't as expensive as it necessarily needed to, could have been if you don't account for behaviour at all, and probably raising corporation tax won't raise as much revenue as you would assume if there was no behavioural impacts. I think there are behavioural impacts. It makes tax rises less good and tax cuts better, cheaper in that sense, but it doesn't actually completely affect it. And just on the issue of further cuts to capital allowances, if that's a possibility, it's worth just pointing out that the UK is exceptionally stingy in terms of capital allowances. If you look at lots of rankings to do with the cost of capital recovery, the UK sits basically at the bottom or joint bottom. I think we briefly came off the bottom because Philip Hammond brought back the structures and buildings and allowance, and that was quite a big deal.
You can't have a low rate and exempt everything. I'm just saying you're not paying a tax, so
I mean, Estonia have a slightly higher rate than us and exempt basically.
All right, okay, fine. All right, okay, fine.
So it can happen.
Okay, it can, yeah. We've got a rather larger state than Estonia. This is all online. Right, now, Ian, let's move on to the other bit, which is even more complicated than this, which is business rates. So everyone's decided they hate business rates. What's going on?
Well, everyone's decided they hate business rates basically because of the rise of online digital businesses, which is undermining the retail sector in particular. And we see all these shops closing, chains closing, and people say, business rates are at something like 50% of commercial rents. This must be too high. This must be what's dragging it down. And to make it worse, revaluations of rates are only done every 5 years or so. So it comes in, it's a big shock to the businesses that have an increase, and so business rates have been seen as the problem. And there is an underlying problem with business rates, that they're not only hitting the land values, they're hitting the values of buildings, which we've already seen are not getting a very fair shake on the corporation tax side. So this is seen as being a sort of double hit on business. And so everyone except most of the parties except the Conservatives are talking about moving to a land value tax, which would exempt the buildings and just be on the values of the land. And the idea behind it from the people who've been promoting it for decades is that this would actually be borne by the landlords instead of by the businesses. So you'd really be relieving business. It's not entirely clear that that's going to work, at least in Britain. When you look at the way commercial rents keep rising, it doesn't seem that landlords are the ones who are getting stuck with all the burdens. I'm not entirely convinced that land value tax works the way it's supposed to in theory. But secondly, the retail businesses in the high street are going to be the ones in the most valuable land, so they're likely to be worse off with land value tax than they are with business rates proportionately if you want to raise the same amount of revenue. And businesses with cheap land, like Amazon with giant warehouses out in the middle of nowhere, are likely to be the ones who gain from land value tax. So the theory sounds very good, but I'm not convinced that this is the solution. But if we want to raise the same amount with this sort of tax, then there's a problem. And the reason why it's problematic is because it's used to fund local government. And so one argument would be shift away from business rates and do more through corporation tax, which would mean you could raise corporation tax without increasing the burden on businesses and perhaps spread it a bit more fairly, but then you've got to find a new way to fund local government. So these are difficult problems. The proposals of the parties fit the theory, but I'm not convinced that they're actually going to help.
So that's scepticism that a land value tax saves the retail sector from us all wanting to shop online broadly, and want to buy less stuff. What about it just being a good idea anyway? So it's not really about saving retail. We just want a land value tax anyway. That's just the cover for getting it through now. But what's your actual view on the actual substance of the proposal?
It sounds like a good idea in theory. I'm just not entirely convinced that it's going to work. For one thing, I'm not convinced that it's easy to actually figure out what land values are apart from businesses, because we don't sell vacant land very much. And if you want to do it in rental values, which some of the advocates propose, we rent out vacant land even less. And there are ways that some jurisdictions have tried of constructing it by depreciating buildings and things like this. But if it's coming to something that's not actually the land value, then it's not clear that the theory will actually work. So I'm skeptical that land value is the panacea that the promoters of it say it is.
Heather, business rates?
Nothing to add to that.
Okay, what about the Conservative plan, which is just much more nakedly, will just be nice to a few people for a year? Anyone want to comment on that? Great idea. I like my music venues getting a small tax cut.
I guess you need to distinguish basically good idea versus like helping retail businesses. Mm-hmm. So I don't necessarily think it's necessarily a good thing to advantage, say, Woolworths against Amazon if that's what consumers would rather use Amazon services. And maybe you say Amazon
I think it's a bit late for Worth.
Yeah, Amazon is free riding off
By about a decade, but
off low congestion charges or something like that. You might be able to construct some argument, but obviously you wouldn't solve this problem through business rate cuts. One of the issues is if you cut business rates across the board rather than just for specific different sectors, landlords will eventually put up rents to compensate because the supply of commercial property is relatively fixed because we have a very restrictive planning system. And actually that restrictive planning system is why business rents are very high and why landlords
High in some places.
Yeah, obviously it's not as restrictive in, say, Sunderland, and business rates are less of a problem in Sunderland.
Okay.
But
What's just one then quickly for each of you? What's the best proposal from the manifestos for business on these from any party? Who wants to kick us off? Ian, what's your favourite? Let's get this positive. You can have an online sales tax. You can have a personal allowance for corporation tax. You can have all kinds of things up here.
The logic of the Greens saying they want to increase corporation tax to the OECD average it's the policy with the most logic. I'm not sure that it actually makes sense, but it's the one party that has...
It's like the worst endorsement for a position I've ever heard. Fine. Okay. Heather, have you got any more convincing arguments for a policy than that?
I'd like to recommend one which isn't there, which is none of them has said anything about what they're going to do with the annual investment allowance, which is what gives particularly smaller businesses 100% allowance on new investment. And that has wobbled around all over the place in recent years. It seemed to have settled at 200,000. It's now gone up to 1 million for a couple of years. That's great, but then it's going to come back down again, which will distort decisions. So some stability and some idea of where the tax system is going rather than lollipops and big sticks.
Very good. Slightly cheating, but very good. Sam? No cheating.
I like the Lib Dem business rates plan. I think that's quite good. I also like the sort of general shift from most of the parties to say that we're going to reform how R&D tax credits work. So if you're purchasing like cloud storage or something like data sets, you can claim that as a research expense. That seems quite sensible.
Yeah. Again, for those people not running research institutions, it is slightly mad that we are incentivized to buy a server rather than pay to use the cloud. It's like nuts as someone who pays lots for both. I can tell you. Right, good. Now we're going to get on to the fun stuff. The rich. Are we? Oh, the wealthy. Right, today you're going to hear from Andy Summers. That's you, Andy. Assistant Professor of Law, LSE. Emma Chamberlain, barrister from Pump Court Tax Chambers. And Caris Roberts, Chief Economist for the Institute for Public Policy Research. Now, the proposals here are, some parties have got a lot more of these than others, obviously. So, income tax from Labour. So, the Conservatives, not so much. Although, a complete triumph, review entrepreneurs' relief. Worst tax relief in the system. Review from the Conservative means they're definitely going to cap the hell out of this or scrap it afterwards. That's really good. Labour are going to just scrap it. And Labour have got a long list. I won't go through the long list, but like if you can tax it, they're going to be taxing it. The higher capital gains tax, higher dividends tax, higher income tax, holiday homes. Not much really on inheritance tax beyond getting rid of something that George did, a particularly stupid policy at the end of his times. Abolished non-dom status, and you can tell us lots about that. But those are the main proposals. It's a long list. The others have kind of got versions of those in the Lib Dem case with a different take on how to raise capital gains tax. Revenues, I don't know what the Green proposals are. This doesn't really tell us. They're merging everything, so a version of something Caris likes. And the Brexit Party would like to abolish inheritance tax. So they're the only ones going directly in the opposite direction of travel. That's the worst policy proposal we've seen on these lists so far. Right, so guys, let's go for... Start off, Andy, with you, given some of the research you're doing. If we do some of these, but don't feel constrained by Labour's actual proposals, just generally, if we try and tax the rich a lot, will they all scarper?
So, look, I mean, I think it's clear that if you raise taxes above a certain level on the wealthy, some will leave. Some will leave. I think the interesting question, though, is whether enough will leave to be fiscally and economically important. So we know that, you know, some we can all name, I think, some high-profile billionaires in the UK who have left partly as a result, perhaps, of high taxes. So
You're not in court, you can actually name them.
Yeah, Jim Radcliffe, Philip Green, a bit further back, Richard Branson, for example. But on the other hand, the UK is, a net importer of billionaires, and you can, and actually the country in the world with the highest number of billionaires per capita is Sweden, which is not a low tax country. And you.
Although it's a low wealth tax country.
That's
a tax haven for wealth, just not for anything else. But
at the other end of this billionaire league table, we can point to countries that have zero income tax or wealth taxes that are net exporters of billionaires. So the point that to sketch here is that taxes matter somewhat, but they're far from the only thing that matters. And so what we really need is sort of not just anecdotes about a few individuals, but population level evidence. And that's what we're severely lacking, not just in the UK, where I think we have really no population level evidence at all about rich people leaving in response to changes in the tax system. But even internationally, there's relatively few studies on this topic because it's a really hard thing to measure for a variety of reasons. But my concern when people ask this question is it's not enough to point to a handful of individuals to make this case. You need to know what the effect is across the whole population, and ideally you want to know what the effect is not only on tax revenues, but also on other economic impacts. So what else do we lose besides tax revenue if people leave, or indeed if they choose not to come to the UK? That's also an important part of the question that I think we're even further from answering.
And most of what you're saying is obviously shared across income and wealth taxes, but particularly on the wealth tax side, where it's particularly top-heavy. But on the income tax side, do we have more evidence of having a go?
So what we have in the UK is a series of studies about what happens to total taxable income when you make various changes to the tax system. So the only output that we look at in that respect is the total amount of tax that the revenue brings in. But that can be affected by a lot of factors other than people migrating to and from the UK. I mean, it could be, and it's often pointed to the fact that people may, for example, choose to work less. Another very important margin, though, is that people are just able to shift their income around. And so when we look at questions like what was the effect of the 50p tax rate during the Labour government, a superficial look at that says it didn't raise very much money. That, as far as we can tell, I mean, we don't have, as I say, we don't have evidence on this yet, but there's no reason to think that that's because a lot of rich people left in response to that policy. In fact, what we know tells us very clearly it was mostly people just shifting the timing of their dividends. So I think, what we have evidence on is these aggregate effects. What we need is to break that down into the different types of behavioural response because they have very different policy implications.
So that is a great academic answer. If you're a policymaker, obviously you don't just get to go like, oh, there's some on one hand, on the other. So what's your actual view? Higher wealth tax and higher income taxes, more people leave or not?
Let me start by offering you...
I don't want the list again.
Let me start by offering you another academic study. So what...
Oh, God. That is not the gap in my life. Okay. So.
Look, no, this gives the clear answer. The picture from the evidence that we have is that people who are already well settled, it takes a lot to get them to move. Okay, so we can't expect a lot of people who are already here to leave, even if taxes, I think, the evidence suggests, went up quite significantly. It's just not a first-order problem, international mobility. But...
this is going to be the other half of the ledger.
People who might be moving somewhere anyway, there is also evidence that they are more likely to move. And so the UK is a potentially complicated picture because we have quite a lot of those people who are not so well tied to the UK who are rich.
Right, now, Karis, you're going to get to answer that question as well, but we know what you're going to say a little bit on the can we get these people more. So when you finish telling us how much we can get these people, can you also tell us which ones might go wrong? So which one might lead to more people going and might be a turkey? But come to that at the end if you want. The first one is to tell us how much we can tax the rich without them all running away, which I'm assuming you're net pro, but then also which one is a turkey?
Well, I think Andy covered it pretty well, really, in terms of whether the rich will go. We've got more information on the billionaires because they're easier to track, essentially. And we know that 84% of the world's billionaires live in the country of their birth. We also know that 5% of billionaires, those ones that did move, moved after becoming successful. So essentially, if you're settled, then you're much less likely to move. So I think you would see some move, but as Andy says, that needs to be weighed up against the benefits of the kinds of policies you're implementing.
Which ones are particularly might go wrong? Yeah, which ones are like, so in general you're quite chilled because not many are going to move unless they happen to have kind of, they get divorced or something else unsettles them. So what is the ones that you might be a bit on the risky side, even if they're not on this list? Which taxes on the top are most risky?
I think that is a very difficult question to answer because I don't think we have the adequate evidence.
Don't you start. Give me your judgment. So policymakers have to have judgments. They're not allowed to be like, I want some more. Well, actually, they do say that all the time, but they shouldn't just say, I need more evidence.
I think more than an individual tax, it's about how they're coming in together and in succession and what the total balance is. So it's sort of a combination. I'm going to fudge it that way.
Semi-fudge. Okay, right. Now, Emma, you're like one of the country's leading experts, particularly on inheritance tax. There's not massive proposals in this area. Is this because it's basically impossible to jack that tax up?
Well, no, we can certainly raise more money from it. But if you just look at, if I can just come back to the question, will the wealthy leave? I think you've got to define them because they're quite different. There's the income, the people high earners. I tend to agree you could probably go to 50% and they're not all going to leave because people can't just get a very well-paid job elsewhere immediately. You probably will lose quite a lot of the hedge fund managers and they'll go to various jurisdictions which will tax them less and they're quite mobile. But the majority of high earners, the super rich rate, will probably pay it and it will take them time to leave. I think there's also a whole other bit that people don't see, which is the billionaires who don't actually, they probably earn a lot less than anyone in this room in terms of income, but they actually have very high wealth assets. And if you tax them, they will leave. And it's how you, it doesn't mean that you can't tax them more, but you've just got to do it cleverly. And I think just saying abolish non-dom status, now there are very good reasons to abolish non-dom status, but unfortunately they haven't really said what they're going to do instead. So, for example, if you abolish non-dom status, what are you going to replace it with? Are we saying that everyone who arrives in this country from day one has to pay capital gains tax on their historic wealth and inheritance tax if they happen to die here? Are we really saying that? Because then we will not get wealthy people coming here, which we want. But there are alternatives to non-dom status, but you may find that you then lose people from the tax net here who are wealthy. Because if you're a UK Don who's wealthy, it's actually quite difficult to avoid inheritance tax because it's linked to non-dom status.
Can you just remind everyone what non-dom status is?
So non-dom is like you can be resident in a place, but you might say, I wasn't born here, my father, it's usually attached to, it's a very patriarchal tax, it's a mad concept. If my father was domiciled elsewhere, if he was born elsewhere and my heart lies somewhere else, or I basically don't intend to settle here in the UK permanently, I can get this special foreign don status and I don't have to pay tax on the same basis as everybody else. We have now abolished non-don status anyway for people who've been here for more than 15 years. We could reduce that down, we could have a different test. But I think to say to every wealthy person who arrives in this country, you're going to have to pay tax on an arising basis on all your historic gains and your and IHT on death is going to be quite difficult. And I think the other thing to think about is and I'm surprised that no parties picked this up, is it's very easy to leave. In the old days, we used to have very complicated rules, case law. Malcolm was involved in some of this. It was actually quite difficult to get a person out of the UK. Now we have a statutory residence test and it's relatively easy for people to go and their footprint isn't actually that different, so they can spend quite a lot of time here, 120 midnights, 180, and they still won't be UK resident once they've got out of the tax net. So we need to be a bit careful because I think the government has been taken aback by how many people have left since the new rules came in. And that may mean that you tighten the residence rules, it may mean you have an exit tax, but you probably need to do something to think about that.
Okay. Why don't we move on to one specific one, which is capital gains tax. So, Emma, why don't you start off with, is the rate just too low?
I wish governments would make up their minds. So we have...
Well, you're the Chancellor for the minute, first female Chancellor. What's the answer?
I quite liked the Labour taper relief idea that you tax long-term gains less and short-term gains more. I thought it probably cut down on a lot of avoidance activity and it worked quite well. The alternative is you align with income tax rates, and that's the sort of general view we seem to be going. The difficulty then is, well, are you going to have an indexation allowance? Because otherwise you're taxing inflationary gains. I don't think it will raise much more money. I think it will definitely increase avoidance. And although everyone says, oh, I can deal with avoidance and we can cut it down, it's going to be quite difficult to stop people leaving, and that was what was happening. That's why it got changed by Labour, really, in 1998, because people were doing an awful lot of things to sell their businesses and not pay tax, because they didn't like paying income tax. And they used to justify it by saying, oh, well, I don't get an index-linked pension like a civil servant, and this is my pension, and all the rest of it. And I'm not saying whether that's right or wrong, but I think that is how people perceive it. So if you want to align with income tax rates, you're probably going to have a tougher test for people leaving. And that may be an exit tax, it may be changing the residence rules, if you really want it to work. Because that was the main area.
But not having it aligned does also drive a different kind of avoidance, isn't it? So we're trading off different kinds of avoidances.
Well, people always say you can turn income into capital.
Some people can.
It's quite difficult. I mean, you can incorporate.
That's
the main
you basically
thing.
Incorporate.
But there's quite a lot of anti-avoidance rules around that now. And
there seems to be quite a lot of it happening.
Well, there's quite a lot of it that's been stopped in the recent years, where no one quite works out what to do on that. So, you know, you could say, well, actually, one-man bands we can deal with in a separate way. Do we actually need to align income tax and CGT rates? So that I suspect it's slightly more complicated than just saying we're going to align income tax rates and raise another 9 billion. I don't believe it.
If we were going to do it, do you prefer Labour's plans align capital gains with income tax rates, or Lib Dem plans, which is you can't have a allowance for capital gains? There's no separate capital gains.
Well, I mean, I sort of thought in the end the Lib Dems were probably putting CGT with income tax in the end. I wasn't sure whether there was a really material difference between them.
I'm not sure they're saying they're changing the rate, are they? They're just getting rid of the allowance. So they're just saying you just start paying capital gains on the first pound. On the first pound of capital gain, it's not clear what they mean on indexation. I presume they mean with an indexation, otherwise it's totally mad. But if there's no indexation at all, you think nothing?
It's an RRA.
Yeah. That's Labour's plan, but I'm assuming you actually did. If you did the Lib Dem plan, you would need to. They've said to me in private that, or whatever. They may or may not be bright enough to have a rate return allowance. We'll find out. But go on, sorry.
Well, I think the problem with abolishing separate capital gains tax lands, you bring an awful lot of people into the CGT net. Which
Give us some examples for people who haven't sold paintings recently, or.
Well, if you're someone with a small portfolio outside an ISA, an old age pensioner, and then you're relying on this for your care home fees or whatever, then you cash in and you've got a £2,000 gain, and suddenly you're going to have to do a tax return, and so that will bring more people into the tax net.
Andy?
Right. I told Emma before this that I would have to find some points of disagreement with her. So I think I might disagree on this because, I mean, it's already true if we look at traders that if you have over £1,000 in trading income, you have to file a self-assessment tax return. So there might be some more people that have to file a self-assessment tax return. I think the craziest thing that we do at the moment is people who are already required to file a self-assessment tax return just don't have to bother to fill out the capital gains tax page currently unless they have over £12,000 in capital gains. So at the very least, there are some incremental administrative changes that we could make there. I think the clearer question of principle is whether it's right that people who are able to diversify their sources of income should pay lower rates than people who only receive their income from one source, which for most people is employment.
Karis?
We've worked on this proposal to align the rates on capital gains tax with income for a couple of reasons, really. One, that we think it's inherently fair that, as Andy says, everyone who should be paying the same income tax rates on the income that they earn, regardless of where it's from and regardless of whether they can shift it. It's actually still not a complete equalisation because you have NICs on employment income, which we're not suggesting it's equalised with. So it's still not entirely aligned. Also,
is that for pragmatic reasons? Is there a theoretical reason for that, or is it just that you think, oh, that's just one bridge too far? We're going to whack them for everything else.
I think it's a very simple concept to explain to people that you should pay the same tax rates. I think it's harder to try and get into that. And then you've got
so it's
corporation tax on the other side,
economy,
hospitals and shareholders, etc., etc. Also because it backs up the income tax system, and that's the entire reason that capital gains tax was introduced in the first place. And thirdly, that it could raise revenue. So I completely accept that it is extremely hard to work out what that would be. We've had an attempt, but we know that it's subject to uncertainty. We're under no illusions about that. But you do need that to put it in a manifesto. One thing on policy detail, though, is firstly that there is a rate of return allowance in the Labour proposal. The Green one party don't really give enough detail on that for us to know. But also in terms of the administrative burden, you can have a de minimis threshold, which means that some people who only get a very small amount don't actually have to declare it, which I think would reduce that complexity.
Okay, right, let's get some questions from you guys on the wealthy. Who wants to come in? You want to ask a question, Heather? That's called cheeky, right? People that are actually in the audience could also think of a question. Go on then, let's have your question.
This is dreadful. It's not a question, it's a comment, but may I do it?
That is double dreadful. Right, come on quickly while everyone thinks about their question.
Just one side effect, possibly, of the capital gains equalisation with income tax rates, particularly, I think, for the tech sector. It's very common for people to come and work in tech startups, get relatively low salaries, but have share options, which at the moment are subject to capital gains or, in some cases, tax-free. And I think that is... the impact on share options has not been explored in any of the manifestos.
Is that going to take us to your conclusion on that? As in, are you worried about it, or you think, good, we're closing down people not getting paid without paying much tax?
I think it goes back to some of the earlier questions about who's mobile and who's not. I think if you're setting up a new tech enterprise, you are recruiting a very mobile workforce, and you've got a lot of choice where to place that. So you might not get people leaving, but what's even harder to measure is who won't come.
Okay, great. Right, now some actual genuine questions. Right, lady. Right, that's a big question. Who's got a fun answer to this? Anyone? I've not actually seen any gender analysis of the tax proposals in these manifestos, so that is a good question. Anyone?
It's probably worth saying that women tend to be lower paid because they tend to do more part-time work over here.
Who am I looking at? Oh, there. What? Ah, right there, sorry, that was very spooky.
So women tend to be lower paid because they can do more part-time work, so anything that affects the balance of tax between lower paid and higher paid is actually going to help women.
Yep. So what, putting up taxes on the rich or cutting national insurance at the bottom will, in general, have some. You're not even on this panel.
Yeah. Oh, I'm writing a paper on this at the moment.
Press your button.
I'm writing a paper on this at the moment, so really briefly, women have much smaller pensions and own fewer shares and less financial assets. So taxes that would rise on those would benefit women more than men.
Well, you mean they would hurt them less?
Hurt them less.
Yeah. Okay. I'm just saying, they're probably not going to say, whoopee-doo, you got my husband. But right, go ahead.
The marriage allowance, I'm feeding here a comment from the Women's Budget Group at another event last week. They were actually quite anti the marriage allowance because it's a disincentive for a woman who's usually the lower earner to go out and earn her own money rather than claiming the £250.
So that's a pro-abolish it. Come on, Sam. They're all flooding in now.
There is some evidence, there is some evidence that women tend to be more responsive to tax rate changes than men. And I believe at one point there was like a small IMF paper that suggested that a lower tax rate on sort of women who have had children would be a probably efficient tax thing, although that obviously upsets lots of people.
It will also probably be
like
illegal.
Equal treatment.
It's probably illegal, but they're yes.
I mean, this is a legal change anyway.
Second earners, who are disproportionately women, are definitely more sensitive to tax, which is why the marriage tax allowance. Right, any more questions? Right,
and then there's the 58 billion for WASPI.
There's 58 billion for WASPI. We can cover that. Not strictly tax, but very silly nonetheless. Right, at the back.
Hi, I was just going to say, I'm from the Women's Budget Group. I asked the question about that. Just to note on, I think our line is really that women rely more on public services, so increases in tax revenue from all the taxes we've talked about this evening are to the benefit of gender equality. So
you're pro-big state?
Yes.
A big state is a woman's state, is the thing. Right, that's great. Anyone else want to come in? Oh, two here. Why don't I take you both? Lady first.
Why do you think there is like a lack of discussion on inheritance tax and reforming inheritance tax?
Great question. And why don't we take the one behind as well, and then we'll get to the next panel.
So we haven't had much discussion of Labour's changes to dividend taxation.
Okay.
What does the panel think of that? Doesn't it essentially make it very, very highly taxed to invest in shares outside a ISA or a pension?
Okay, that's a great question. Right, well, Emma, why don't you take the why is no one talking about inheritance tax except for Labour saying?
Talk about inheritance tax all day.
Please don't do that.
I mean, the Labour policy of reviewing or reversing George Osborne's IHT cut, which is this business of having a residential nil rate band, and it's so complicated that even the Revenue's own guidance, I think, wasn't originally in accordance with the legislation, and they had to change the legislation to work it out with the guidance. It's far too complicated. It's completely unnecessary. It's the idea that you can stand up and say that £1 million can go tax-free to your family without paying inheritance tax. And I totally agree that it should be reversed immediately. If you were doing any more on IHT, well, there are two options really. You either just do small changes, a few policy reforms here and there, abolishing lifetime exemptions, simplifying it a bit, changing the 7 years in some way, abolishing taper, and those are the sorts of things the Office for Tax Simplification have talked about. You could go more radical. You could have capital gains tax instead of inheritance tax on death, but you'll raise less revenue and you'll bring more people into the tax net. You could go with, I think, what you probably favour, the IPPR, which is to have a capital acquisitions tax, which is the way Ireland's gone. And there are lots of good things about that, but it's not simple. And it needs quite a bit of design work to get it to operate properly. And then you could go with the sort of flat rate, broad-based option, no reliefs, 10%, 20%, all lifetime giving tax, but it's still an estate tax, so they don't all deduct. So those are broadly, I think, 4 options. And then you have to sort of work out what you want.
Which one do you like, shortly?
Well, I like flat rate, 15, 20%. Absolutely no reliefs, except if you had to spouse relief and charities exemption, the rest go.
So we can get
And
the
all
farms. We can have the
lifetime
farms.
giving tax. Sorry?
We can have the farms then.
You have everything, farms, businesses, the whole lot is taxed, because at 15 or 20%, you'll do it. No farm
Only 10%
dance.
of the farm. That's not what the farmer's going to say. Okay? I guarantee you, having met the farmers, that is not what they're going to
No,
say.
I think they will buy it because of the and all lifetime giving is taxed. So you will, but the problem we face is that we can't actually say whether we'll raise more money from it because we have so little data on lifetime transfers of wealth. But capital acquisitions tax is well worth looking at. These options.
Okay, that's great. Which one of you wants to take the second question? That was actually the first question. You can't agree with each other. We haven't got time.
I suspect we might have a similar answer. So, I mean, the conventional reason given for taxing dividends at a lower rate is because the dividends are paid out of profits that have already been subject to corporation tax. So that's the reason people usually give for having a lower rate of dividend tax. I think what that misses when you look at the big picture between the way we tax wealth and the way we tax work is that on top of the income tax that you pay if you're an employee, you also pay national insurance contributions. So it's a little bit of a rough and ready kind of offsetting that's going on here, but I think there's a good case for saying, actually, if we just tax dividends at the same rate as income tax, this doesn't take account of the corporation tax paid. On the other side, it equalises the fact that you're not paying national insurance contributions.
So that means you think we can get away with it? Go on, Karis.
Very quickly, I just want to dispel this notion of the mythical granny who has really no employment income or pension income, has massive amounts of shares, and if you tax her, it's going to increase child poverty. I have literally seen that one.
Do you think you might have got to the straw man at the end? I was so with you.
But just, I mean, it's not as stark in terms of the distribution as capital gains are. Nonetheless, we know that roughly around 86% of pensioners don't own any shares at all. You might expect a retiree with £100,000 in shares to be about £5 a week worse off under this proposal. So we're not talking about really drastic punitive taxes.
Will anybody not be in the top 5%?
Personally, I think so, yes.
Yes,
but I think that technically is allowed under Labour's exact proposal for the 5%.
I see. Okay, all right. You're going for the technical cop-out rather than the... You have two options, deny or technical cop-out. That's fine. That's a good plan. Right, on that note, we're going to finish up the tax on the wealthy panel and move on to... This is the really worthy panel, okay? The environment and health taxes panel, if I can make our clicker work. Right, we're going to hear from Aaron Advani from Warwick. We're going to hear from Alex Brown from the Grantham Research Institute and Kate Smith from the IFS. So to kick us off on the really small question. Here's the party's proposals. These are much shorter. As you can see, this is like scary. No one wants to talk about sins. So, Alex, why don't you kick us off on, can we just deal with climate change via tax, and how do these party proposals measure up against trying to do that?
Well, certainly tax can be used to tackle climate change, and in effect, it is already in this country. I think the problem is twofold. One, average tax rates on carbon are just not high enough, given aspirations for achieving net zero greenhouse gas emissions. Second, basically, UK carbon prices are all over the place, both between households and firms, and between different activities amongst households. If you use your car, you're taxed much more heavily on the carbon you use than if you heat your house, particularly with gas. This doesn't seem particularly logical, and it's giving people the wrong incentives. I mean, the big advantage, of course, of using carbon pricing in some way is that it gives such a pervasive signal to everybody along the supply chain. And I think the one criticism I would have of the otherwise excellent work of the UK Climate Change Committee is tendency to go for a kind of central planning approach of, in this sector, we must have the following measures by such and such a date. We don't know, in particular, so far away from targets for net zero, precisely where the big carbon reductions are going to come from. I mean, it all depends on the pattern of innovation. And I think that using a broad carbon tax to incentivize that innovation is the right way to go about things. We do have to have some clear system of reviewing and revising carbon prices. It's a great shame that fuel escalator duties have been undone almost as soon as they've been introduced. We need some sort of framework for having a dispassionate review of new evidence and revision of carbon tax.
And on the specific proposals, is there anything so none of it really deals with your big issue, which is, as a good Liberal, you want a broad tax that gets everything, and then we'll see what happens?
Yeah, I think, I mean, the Green Party comes nearest to it. Mm-hmm. In my own view, they kind of have some great ideas and then they go and spoil it. Basically, they layer on all sorts of quantitative controls and regulations on top of what they want to do on carbon pricing. In my view, their target for achieving net zero, which is 2030, is really ambitious, and I think estimates of the cost of doing that suggest that's a really big political ask.
By really ambitious, is that you being polite as impossible, or...
No,
let's get to the...
I think it could be possible if one devoted a lot of resources to changing the energy system, changing the transport system. I think it would be very inefficient. I think the point that the IFS has made about ramping up investment in general, how difficult it is to increase public investment efficiently, is true in spades in this area.
Okay. Now, let's focus on some of this. What's a good bit of environmental taxation going on here?
Oh.
Windfall tax on oil, do you like? What do you like?
Don't make me look for good bits in this.
I want some good bits. Come on, we need some positivity in the room. I mean, you're going to have to vote for one of these, yeah? That's how it works. So
I guess the good bit is the bit that Alex already picked up, which was the Green Party's one was probably the closest to something that makes some sense here. So
why don't you explain what the policy is?
Okay,
not everyone in the room I hear has read the Green Party Manifesto. So.
Oh, well, it's fascinating. You should read through every page. I also haven't read through every page. But the Green Party policy in this area is essentially a carbon tax, but then instead of going for, and let's put that on everything, they've said on a particular subset of things, which will be extraction of fuel domestically and also imports of fuel, which is a subset of things. Fuel is important. It's not the only thing at all. There's lots of embedded carbon in other stuff. So we probably want to think of a broader base than that. Clearly, there are lots of other ways in which we're making use. I mean, agriculture, cows are kind of the classic example that people think of with methane. But in everything there is embedded carbon, and you want to have a nice broad base that covers all of that.
What about the Lib Dems? Have at least got a frequent flyer tax. It's sounds catchy. Pro or anti? How often do you fly?
Probably a couple of times a year.
Oh, you're fine. You're fine on this.
Exactly. So bizarrely, I'm in the group that ends up getting a lower tax because what they want to do. The Liberal Democrats had this amazing idea of what we want to do is to take into account of the fact we don't properly tax flying. And then they said, well, we want to do redistribution. What we're going to do is use this as a tax that does redistribution. So we'll increase taxes for frequent flyers and we'll reduce taxes somehow for infrequent flyers and therefore somehow compensate them and make them more likely to fly. So it's no longer an environmental tax. It's a bizarre form of redistribution that you could, if that's what you're trying to do that through the rest of the benefit system. So I think it has nothing going for it as an environmental policy.
Okay, well that's good that you are the winner on the non-fence. Do you want to come on in on environmental taxes, or you want to wait till we get to the really fizzy stuff? Fine,
Can I throw one minute more in then?
Yes,
having slammed everyone else, I also want to slam the Tories.
Right, wait a second.
So you can roll back on that one.
There's not much there, so what are you going after?
Well, exactly. But so okay. the one policy that they had was, well, we'll have a reasonably large tax on an incredibly small, irrelevant part of the base, and in a way that will actually probably be distortive because... So the policy for the people, again, who haven't read it, is for a tax, but specifically on non-renewable plastic in packaging. Now, there's clearly non-renewable plastic in lots of other stuff. Renewable plastic in packaging isn't always being recycled, and also packaging could be made out of other stuff that might be higher carbon than plastic. So it's a very bizarre policy because, again, it will create all kinds of inefficiencies and it won't raise any money or do that much good for the environment.
So you're basically pro-plastic. That's what that's what I heard there. Is that what you're saying?
I'm pro-reducing carbon emissions at whatever source it's from, plastic.
I mean, David Attenborough is not going to like you. Right, Kate, you're basically the national expert on taxing sugary stuff. Well, it's gone pretty well, I'd say. It's been a good decade. So Labour's got a plan to go after the milky stuff as well. What's going on?
Yeah, well, so I'm sure everyone who buys Coke is aware it's now more expensive than it used to be. So the kind of rationale for this was people in general, most people actually consume more sugar than is recommended, and this is actually particularly true among young people. And actually a big source of sugar is soft drinks. So this was kind of motivated, and again, the sort of Econ 101 rationale for this is that there are some kind of costs associated with consuming too much sugar that people don't take into account when they are choosing what to eat and drink. So obesity, diet-related disease, diabetes, etc., that create costs to the NHS and perhaps yourself in the future that you don't take into account. So the idea is that by raising the price of the sugary stuff, we can kind of get people to sort of internalize those costs. So currently it is on soft drinks that are not fruit and milk based. So the number of people have noted that this kind of maybe creates problems.
Do you want to remind people why milky drinks were excluded in the first place?
Well, so the fruit juice and milk argument, I think the idea was that these have some other nutritional benefit to them. Now, I think this should be thought carefully about in the sense that what you want to do is set a tax that's equal to the marginal or the additional kind of negative cost that's created on that's sort of imposed on society from drinking an extra whatever litre of stuff.
A litre?
Whatever, some amount.
Don't drink a litre of anything.
Yeah,
water. Just water.
Just water. Obviously it matters, so the rate that you set matters. So actually if you think that fruit, orange juice has some sugar in it, but maybe it's got other nutrients, and maybe you don't want to tax it quite as much as soft drinks. So, a risk potentially if you bring, fruit juice in at the same rate as Coke, sugary Coke is currently taxed. It might be the case that currently, given the price differential, people are switching from Coke to fruit juice. If they were then taxed the same, perhaps they would just continue to buy Coke if they just happen to really like sugary stuff. So I think, it's sort of the details, but thought should be given to the kind of extent to which we want to vary these rates across different types of drinks.
So just to unfairly push you then, so is that pro or anti covering the milk?
Yeah, I think we should.
You're after the milk.
We should extend it to cover milk-based.
Back before this policy was introduced by the Conservative coalition, the coalition government after 2010, but we planned to do this pre-2010 under the Labour government, but never announced it. The reason we never announced it is because of the bloody milk and the fruit juice, which is that we started down the line. The policy makes lots of sense in lots of ways, raises a bit of money, and then suddenly this was the phase at the end of the 2000s when smoothies were getting really popular. And everyone was like, have you seen the sugar in the smoothies? At which point the policy died. Right.
I mean, I don't know if you saw the news on the amount of sugar in
Yes.
Starbucks.
Should tax Starbucks.
Well, I mean, that's another source of, I mean, that's, it's not clear that...
What was it, 26?
23 grams in some kind of, 23 teaspoons, that was it, in some particularly sugary Starbucks
Stop
gingerbread
putting
latte.
syrup in your coffee is basically what the thing said. Which I always think, who the hell is putting syrup in their coffee anyway? But if anyone's doing that, that's a really weird habit. Just stop it. Right. Vidiva, you got strong views on this? Otherwise, we're going to go to the audience. You're not bothered. You just want to save the planet. You don't care about the health. Right. Everyone's in their silo. That's good. Right, let's get some questions. What do you want to tax? This is your chance to get sugar questions in.
Yeah, so what explains the astounding lack of ambition in Labour's environmental tax policy? I'm not seeing really anything in the Labour side where they should really be doing a lot of things, shouldn't they?
Okay. So, Aaron, so the Labour's policy is I can't remember what the exact wording is, but it's basically to aim for net zero by 2030. Where's the tax?
Well, exactly. I mean, Labour's view, as far as I can tell from their manifesto, I have no inside knowledge, is all of the environmental stuff they want to do, they're going to do on the spending side and regulation side, nothing on the tax side, except to some extent raising taxes in other places to pay for some of this stuff.
Yeah. So just to push a bit then, so are we sure that isn't the right lesson from France, a few other countries recently, where tax goes at decarbonisation have proved tricky, whereas if we just start regulating stuff out and paying for things via general taxation, maybe that's a better thing. I'm trying to,
So I'm definitely not against there also being regulations in this area, and against, or even
you just want
necessarily
everything.
against-
You want everything.
Yeah, I want everything. If you're serious about doing, I mean, I'm sceptical of Alex's comment that you could get there by 2030 in any form net zero by 2030. I can't imagine, but if you want to get there, I'm okay with there being spending to do that. I'm also okay with there being regulation, but I don't see why you wouldn't want to also do the tax.
And you're not worried about the distributional effects of that. So even the sugar tax, you get some people say, it's regressive and all that stuff. We'll come back on that in a second. But
I will go to the standard comment, which is you really need to think about the tax system as a system. And so I just don't want the
public
Lib
don't,
Dem.
is the-
So I do not want the Lib Dem thing of we'll try and do weird redistribution through the environmental tax.
Oh, you made that point, yeah.
Right. that just seems like the wrong thing to
Alex, defend Labour or attack them?
One thing that some jurisdictions have done is have a citizen's carbon dividend. You don't have to earmark the entire revenue from carbon pricing for that purpose, but I think it's well worth trying that device. It's worked in places like British Columbia, I think, to get much greater public acceptance, and I think it would be worth investigating that further. The other thing I wanted to say is I'm very surprised at the way sometimes people say, look, the general population is not going to accept explicit carbon taxation, so we need to do this by stealth, by a raft of regulation. And there's a study at UC San Diego which suggested that the standards in the US for corporate fuel economy across car companies basically meant that the cost of achieving carbon reductions was 3 times what it would have been had they just increased gasoline taxes.
So you're making the case in principle that in some circumstances tax is definitely preferable to regulation.
I think a lot of regulations have big downsides which are not always appreciated initially, and on top of that they distort across sectors.
Okay, that's proper liberal argument. Right, let's get some more questions. You can do sugar, you can do save the planet. Decide what's more important, your future or everyone's. Anyone? No one?
There's a good reason the fuel duty escalator has not operated for longer than it did operate. And that's because of the protests when the duty was going up year on year, as we've seen in France recently, that people do not like seeing large taxes. I mean, the duty we pay on fuel is enormous already, making it even more enormous, which I accept there's a good environmental case for doing it, but people just don't like it.
Well, so the haulage sector is in the room.
The vehicle fuel duties are remarkably high. There are a lot of things, carbon prices in the UK, which are remarkably low. I mean, the lower rate of VAT on domestic energy, for instance. So I think there's scope for a kind of grand review here where you might end up with not much higher taxation on vehicle fuel, but quite a lot higher taxation in other areas which are undertaxed at the moment. And as I say, I think you can sweeten the pill by having some sort of citizens' dividend from the revenues.
So that's good. He's trumping your unpopular policy with a promise to put up people's tax on their gas heating, which will be totally popular.
I'm going to go rogue here and go off a bit off topic, but so at least for my own topic, it's very much on topic. I mean, I think the thing is, so again, going back to the motivation for taxing driving is that there are externalities created. One of those are emissions, but actually the fuel duty levied is much higher than the emissions. However, by far and away the biggest social cost from driving is congestion, which currently fuel duty is incredibly poorly targeted at doing. And so actually moving towards a system of road pricing. And if we did that now, where we currently have fuel duty that people pay, and we could combine it with reductions in fuel duty, that might be more sort of politically appealing than realising in 10 years' time that we've shifted to electric cars. We don't have any fuel duty to offset it against anymore, and now there are way more cars on the road because now no one pays any tax at all to drive. So I think that should be thought carefully about.
Politicians are scared out of their mind about road pricing. If you've tried it on them, I don't know why, except they can kind of vaguely cope with city zones. Once you get beyond that, they start having proper anxiety attacks about, have you met people driving on the M1? Right, anyone else? One more question in the space? What is this panel question thing? So the whole like panel and audience division is like being ruined. Right, come on then.
I wonder what you guys think of the windfall tax on oil, because I don't really understand why you do a windfall tax on pollution, because the point of a windfall tax is it doesn't affect behaviour, so you can raise lots of money.
So now you're giving an answer too.
Yeah, but
right.
I'd like to sort of like...
You can either be in the audience or the panel. Right. Come on then, windfall tax on oil, and tell people what the policy actually is.
The policy is to have a windfall tax on oil.
You got any more details than that?
I can't remember what the amount is.
Okay,
so,
fine, all right.
No, sorry. Fully agreed. I wouldn't have put it in the environmental set of taxes. It's a tax. I think it's there as a thing to raise money rather than there as a thing that's designed to have environmental effects.
But it doesn't raise much money, does it? And it's just in one go.
Yeah, I mean, it's a one-off way of raising some money in the short term.
Basically. Okay, great. Right, let's move on to our last panel. We're kind of almost on time, which is a triumph given what is going on. So now we're going to do tax avoidance and evasion, and we're going to hear from Michael Blackwell from LSE, Malcolm Gammy from 1 Essex Court Chambers, and Robert Palmer from Executive Director from the Tax Justice UK. So just as a reminder for everyone, the avoidance is the kind of normally pretty legal stuff, and the evasion is the stop it. Police and other people are going to get you stuff. We're not going to spend our time. We're not going to have a row about the definitions of the two. We'll be here all night. We've all got lives to lead. But what is here's the proposals. Obviously, only an idiot is in favour in principle of avoidance and evasion. So the policies to crack down on it are really long. Here's a suggestion of them. So why don't we kick off on how realistic is, and all the parties, I don't think the Conservative Party have got a big number in there, but they do have a number for plan to raise money from getting rid of these nasty things. So how much can we actually raise from doing this stuff? Michael. Put it on, there you go. Don't let go.
Sure. In honesty, I think over the last decade, in every budget, there's been more action on anti-avoidance. And so for avoidance, it's probably very little that we can gain from changing the law now. We've got a backlog of mitigation, and that mitigation can be entered into, and undoubtedly from financing HMRC a bit more, they may be able to raise some more from historic issues. But going forward, very little. From evasion, then there is the black economy. And the higher the rates of tax go up, the more the black economy will be.
Keep your finger down. Keep going. Okay, what about a general avoidance rule? So we've got so Labour wants to replace the current general anti-avoidance rule, abuse rule, with a renamed but same acronym rule.
Essentially, they want to introduce, they say in their manifesto, something very similar to the New Zealand model. The GAR we've had at the moment is very new. We haven't had litigated cases on it. When it was introduced, it was aimed to basically strike a balance between the need for certainty for taxpayers and combating what was seen as egregious behaviour. To my mind, it strikes that balance very well. We've got a GAR panel with very expert people who taxpayers can have certainty in because they understand the commercial arrangements and therefore they know in something like a complex securitisation what is normal market behaviour and what is abnormal behaviour that's solely motivated by gaining a tax advantage.
Do you want to remind people what a GAR is and what its purpose was?
Well, the GAR, the General Anti-Abuse Rule, is a rule that basically says that where conduct cannot reasonably be regarded as a reasonable exercise of choice, then a counteraction can be made to say, we'll look at an alternative situation and tax you on that basis. And so that rule was enacted. And as I say, we haven't had any cases. We've had several cases go to the advisory panel so far who found in favour of HMRC. And so it's not that the advisory panel is somehow, even though it has professionals on it who have worked for the taxpayer, that doesn't mean that they're in any way biased. They're like genuine people doing their job in an extremely professional manner, just like part-time judges who also sit as, you have many tax judges who are practitioners as well.
Okay, Robert, you're in favour of getting everybody on all this stuff. That's your kind of job. So which of these are your favourites?
I think, as with across the whole manifesto, there's big differences in ambition. So the Conservatives are going to go after tax evasion when it comes to cigarette packaging, and Labour is going to rewrite the global corporate tax rules. And inevitably, the amounts of money that can be raised from these two different things are quite different. Having said that, the Lib Dems, the Conservatives and Labour are all doing things around international tax. So the Conservatives and the Lib Dems have this idea of a digital sales tax, which is where you take a percentage of the revenues that the big digital companies make in the UK. A number of other countries have tried this or are trying this. This is mostly against US companies. The US is going to tax France's cheese and champagne at a higher rate. So the kind of context of this is potentially emerging global tax war around how we tax these big multinational companies. I think what is good about what Labour and the Lib Dems want to do is they're not fiddling around the edges. They're saying, look, the fundamental ways in which we tax these big multinational companies.
Let's come back to multinational companies, but just on, because I agree, there's lots in there, but there's a long list of stuff that's direct on particular kinds of avoidance, at least in Labour's proposals.
Yeah, and I mean, Labour's been quite clever at not costing up most of it. They've got a 20-page document of which only 2 proposals are costed. One of which is to basically hire a huge number more tax inspectors that will do more audits. There's good evidence from my fellow panellist Aaron that this can bring in significant amounts of money and change behaviour. Labour will also slap an extra charge if you're an offshore company buying UK property. I think they'll perhaps raise slightly less money than they say because there's been some tax changes that make it less attractive. The Lib Dems have done the sort of classic thing of, we've got a big number, we've got some ideas, it's like a paragraph, so it's very difficult to tell what is actually going to raise it. The SNP has got kind of motherhood and apple pie with very, very little specifics. The Conservatives have said they're going to do some more increased sentences, crack down on cigarette packaging evasion in the construction sector, raise an extra 200 million, which is potentially reasonable. It's a different order of magnitude from what Labour and the Lib Dems are promising.
So Malcolm, what about the debate between how much action there is on the avoidance and the evasion side? So like avoidance was kind of the hot topic at the end of the 2000s into like parts of this decade. Is there more focus on evasion these days? Some of this? Lock them up. They want to do, like, people want to talk about inspections and audits of tax returns. They were embarrassed about that for parts of the past. That isn't what the Inland Revenue would have wanted to talk about.
I mean, I don't get the impression that
the sort of attitude to evasion has changed significantly. I mean, the Revenue have always had a focus on dealing with areas of evasion, and they've adjusted, things in a variety of ways to try and improve what they can do. I suppose if they had more resources, then they would be able to do more work to try and to deal with some areas of problematic areas of the black economy where maybe they can't do a great deal of or as much work as they'd like to do at the moment. So I don't get the impression that there's a huge change in attitude towards evasion. And in relation to avoidance, I think Michael has identified the point. We had 2013, we had the general anti-abuse rule, but actually since 2013, maybe before as well, but certainly after, we've just had measure after measure after measure targeted at avoidance of one form or another. And basically speaking, avoidance is an area of the tax system where it's always problematic. There are problematic aspects to something you're trying to tax, which is why you then have to put in really some pretty general language to try and stop people or to catch people doing what you don't want them to do. And none of this has actually, I suspect, been properly reviewed since it's all come in. It's difficult to know what people are doing these days.
I think on the avoidance side, because the general intention here is to get to a culture change where people don't try in the first place. They don't go for very complicated avoidance schemes in the first place so that you don't ever get into the GAR. Is there any sign of that happening by firms or individuals being more reluctant to engage in complex schemes?
Well, I'm sure it's changed significantly in the business area where, certainly any company of any size, just doesn't want to be involved in that at all. Individuals are always problematic because, people have very different attitudes to the tax system and ideas as to what tax they should or shouldn't be paying. Ultimately, we're back to the sort of things that Emma and the others were talking about, whether people come or go, because ultimately, if they don't like it, and they'll leave, or they won't come here in the first place. If we're doing away with non-dom status, nobody's mentioned Premier Football Club.
Come on then.
Football players. What are we going to do?
What are we going to do?
All these foreign football players, are they all going to go and play for clubs elsewhere? I thought this was a major issue. Special relief.
We're having a special relief.
That's my one proposal, that there should be a special relief for Premier.
Oh wait, you want an avoidance allowance?
Yeah,
what do you want?
Absolutely, yes.
Okay, I think that's the worst proposal for tonight. Fine, right, okay, now we're going to let Robert get at the thing he wants to get at, which is, okay, so let's focus just on multinationals, okay? Where clearly in the real world, there's, if anything, I don't know, you'll have your views on this, but in lots of ways at the OECD, there's been more progress than I would have said was possible in 2010. If you asked me 10 years ago, would we, 10 years later, have some degree of consensus and discussions about big changes to the corporation? I'd have said no. We do appear to have that, but we also have countries proposing to go it alone. So what is our balance between it's helpful countries pushing ahead on their own because it's moving the debate versus that's a mad idea for a country like ours who wants to kick off? Let's do the definitely go for it, and then we'll come to the sensible answer here.
So
that was slightly unfair, sorry.
As you say, we've seen huge change over the last 10 years in terms of discussions about how we tax big multinational companies. The kind of context of the current system is over 100 years old at its heart and based on a total fiction that when you've got a big multinational and it's got different components trading amongst themselves, that they all do so at this arm's length idea. And so they're all finding out what the price is and then doing it. And it's an absolute recipe for tax avoidance and for reducing your corporate tax rate. Now, the US is quite good at saying, we will tax you on the profits you make here in the US. And if you look at the rates that people like Google pay in the US, it's pretty high, or higher than they do, high-ish compared to globally. And then the US has this attitude that we don't really care what you do internationally. And so that means you've got some big, very, very profitable companies paying very, very little taxes in countries where they have a lot of customers. And so I think there's pretty universal agreement that the current system isn't working and needs to change. The question is what replaces it. So Labour's idea is to basically stop fiddling around on the edges and say, we're actually going to take a step back and look at how you do this properly. And the Lib Dems have got a similar proposal, which is that rather than having this fiction that all these companies are trading with each other, you just say, let's take the whole profits of these companies and then say we allocate profits to different countries based on a formula. Lib Dems just say it's based on sales, Labour based on sales, assets and employees. And on the surface, this is a much simpler way of dealing with international tax. The challenge is obviously the transition, how you get there. Now, the OECD, which is the big global body deciding the tax rules, has actually engaged and put forward a very weak idea of using a formula to help tax multinationals, which isn't very good, but it shows the direction of travel. And I think government saying and standing up and saying, actually, we think there's a better way of doing it and we're going to try. The question is whether the UK can do it unilaterally or should do it unilaterally. Now, the sort of law experts who know more about tax treaties than I do say it is possible. Politically, I think it's useful as part of a bargaining chip. Who knows where the international negotiations are going? I think the current system isn't working, and the fact that all parties have got something in there on this is a sign of progress. I think a digital sales tax, which some of them want, is a bit of a sticking plaster.
Why is it a sticking plaster?
Because I think it's a bad idea just to say, it's basically another sales tax. It's saying that we'll add a bit more money on digital companies, whether they're making a profit or not. It depends on how it's framed. I think it'd be much better. I mean, it helped push the debate along, but I think it's much better to step back and think, okay, how do we structure this tax system overall?
Okay. Who wants to come in on good, bad idea?
I mean, I'll just say we can do things unilaterally. We did things unilaterally with the diverted profits tax when we introduced it. So it's not impossible, but that's a small thing around the edges. And so if we try and introduce this sort of bigger reform unilaterally, I think we just risk as the large businesses leaving the UK. And the other thing I would note, which isn't on your slides about the Labour Party's manifesto on this, about large multinationals, is that they plan to make them file their tax returns publicly as well. And so, again, for multinationals, maybe in the pharmaceutical industry or so forth, who regard certain of their things as confidential, that may again prove an incentive.
So just on they'll move. So Labour's response to that will be they can move their headquarters, but the point is we're going to get them for the sales, and they want to flog to British consumers. So the whole point is to get to a tax system where it's less, although not unimportant, where they are headquartered. What's your response to?
I think it is important in terms of jobs as to where people are headquartered, and especially if other countries do maintain tests that are on the basis of headquarters and so forth, and we have double tax treaties, and it's unclear how that would apply to the new taxes.
I've no idea what the answer to this.
Well, I mean, start. Of course we can do it unilaterally, and once we've left the EU, we don't even have to comply with EU non-discrimination rules or anything like that, so we can do what we like.
We'll have taken back control.
We're taking back control, absolutely. But, I mean, I'm not sure I necessarily agree with Michael that people leave. I mean, they might do, and, we might not have companies headquartered here, but, I mean, you can't get away from the fact that companies don't bear the tax that they pay. So one way or another, consumers will be paying more here. That would be the natural response to it. Either wages will be lower or consumers will be paying more. So, I mean, you can't get away from the fact that corporation tax is actually not a very good tax, certainly in terms of knowing who it is who actually bears that tax.
So go on, just talk about, obviously the incidence of a tax that is getting at multinationals is obviously more complicated than one country. So if they're undertaxed on the UK profits already.
If we're looking at the particular proposal about unitary, then of course that's been hotly debated. I mean, they've had unitary taxation in the US since 1959 when they agreed their three-factor formula, and you can look at the way in which 50 states or 46, however many it is, have corporate tax in the US have manipulated the formula to sort of determine who actually does business within that state, and the way in which they actually pay tax there. So, apart from the question of whether you can actually implement this unilaterally, you can, but query what the effects of that are.
Okay, let's do one last question, then we'll go to the panel, which is, if you've got, let's just focus on what you can do at the HMRC side. So no, you're not allowed to change the law, you're just allowed to do things. So if we give HMRC £1 million to do something, to get the tax gap down, to reduce avoidance or evasion, so we know what one person's answer is, but what do you want? Do you want old revenue style breaking down doors? Do you want audits of the self-employed? Do you want corporate pain? Like, where's your marginal pound? Where are we going to get most out? Where can we squeeze for our £1 million of HMRC cash?
You mean where should the revenue use their resources?
Exactly. Where do the resources go to get us some money in?
Well, in this particular area, I'd have thought evasion is probably the trying to get more from the black economy.
By how do we do that?
Combination of resources and, I suppose, information and the like.
Okay. What do you want us to do?
Yes, I think I'd agree with Malcolm that it's really the tax gap's largely on evasion, and therefore more work there.
Okay.
And yeah.
Should we just ban the self-employed being paid in anything other than debit cards? No more cash.
I mean, I agree with these two, but to do something else, the tax system is incredibly complicated, and the government has shut down almost all local tax offices. You wouldn't get very much for your £1 million, but it's very hard to get free tax advice if you're a taxpayer now. So something around that, I think, would be quite interesting. From the
because you think people are making mistakes rather than.
Yeah, I think sometimes people are making mistakes. Not everyone, but and maybe not most people, but definitely people are making mistakes. And so if you're going to invest in HMRC, I mean, I think targeted audits and other things that you could do are great, but I think also we shouldn't forget that all of us have to pay our taxes, and making it a bit easier might help.
Right. I did not expect you to come out on the better customer service answer. Right, it's unusual. Right, come on then, let's get a few questions on this, and then we shall wrap up. Gentleman here.
Let's assume that we get together in just 1 year time, and Boris Johnson is in number 10, and the UK is facing a hard Brexit. My question is, what do you expect will be the net effect of hard Brexit in the UK tax system and in the UK Gini coefficient in terms of, inequality?
That's a big question. Who wants to go at that? I'll take anyone from anywhere. Right, you're a bold man.
I mean, in terms of tax take, it's going to plummet. The estimates and debt will go up. So I think we're going to face some pretty big challenges. Who's going to lose out? Well, there's going to be lots of pressure to cut government services. So I would say that probably, based on my extensive research on this, our Gini coefficient will go up, and we'll get more inequality.
Project Fear. Right. Anyone else want to come in?
It's going to be Singapore and Thames, isn't it? Isn't that where we end up? Back over here.
Oh, Singapore and Thames? Okay.
The Lib Dems have made an estimate of trying to quantify what the Remain bonus would be if we don't leave the EU, and their figure for 24-25 is 14.3 billion. I've no idea whether their figures are right or not, but at least they've made an attempt to say, well, how much is it really going to cost us to do Brexit?
Very good. This is definitely not turning into a Brexit session, because every other debate in the history of the world is already doing that. Has anyone got a non-Brexit question they would like to come in on? Go ahead, sir.
Thank you. So there has been a statement when it comes to the publication of M&E's profiles when it comes to taxes and their profits. So how do you comment on UK's abstention when it comes to M&Es, forcing them actually to publish their profits and their taxes that are paying in the European Union in the past few days? Thank you very much.
Okay, so it's on tax and profit transparency at the firm level?
Exactly. It has to do with this. Thank you.
Okay. Who wants to come in? Michael? Yay or nay? Because we're going to start wrapping up.
No, in general, because the whole history of the income tax and the scheduler system was wholly devised around taxpayer confidentiality. And it's just this idea that the government and, people at large don't have a right to see my email account, they don't have a right to see my tax return.
It's not a very Norwegian answer.
I'm British, not Norwegian.
Very good. Are you Norwegian?
The question was around big multinational companies, and I'm going to disagree and perhaps unexpectedly, unsurprisingly say that I think we do need more transparency and more trust. And one way of doing that is publishing more information on what big companies are paying. And I think on Australia, you publish fairly headline figures, and the world hasn't ended, business investment hasn't collapsed. We can't have it both ways. We can't say businesses are individuals on one level and have privacy, and on the other say, oh, businesses are not individuals and they don't pay tax themselves.
Okay, Malcolm?
I don't think I have a particularly strong view one way or the other for large companies. I mean, they already have to publish a certain amount of information about their tax affairs, and they also have to publish a tax strategy and so on. So it may be that there's some scope for a bit more information.
Okay, right, last set of questions. Anyone from the side? Burning question. It can be off topic now or Rome, because I'm going to wrap up in a second. Anything on tax? Right, lady here.
Thanks. I've got two related questions, I suppose, about the framing of tax policy. So on the one hand, my guess would be that most panellists would be in favour of a much more parsimonious tax system, but that's not at all how these policies are framed. It's incremental and bitty, and so how could there possibly be a shift towards that being how tax policy is framed? And secondly, I imagine people are not at all in favour of hypothecated taxes, and actually I think they're quite absent from these manifestos, so that's a good thing. But then again,
I think the Brexit Party has got a classic somewhere.
How do you shift the framing away from that sort of...
There's definitely something. The Brexit Party want to hypothecate something.
Yeah, how do you shift the framing away from that sort of way of talking about tax and spend?
Okay, right, that is definitely broader. Who wants to come in on tax simplification? I remember Alistair Darling's first ever interview as Chancellor. He was asked what was he about as a Chancellor, and he looked very seriously at George Barker from the FT and said, I'm about simplifying the tax system. And 2 weeks later, Northern Rock went bust. So that went well for us. Go ahead.
So I've spent quite a lot of time on Institute of Tax and CBI tax committees forever trying to work out how you might get tax simplification done. The answer from MPs is that whenever you change anything in the tax system, the people who win say thank you very much quite quietly, and the people who lose shout very loudly. So it's difficult. There are no votes in tax simplification. What we need to do, therefore, and the Institute for Government have written some good stuff on this, is you need to look at the process. How do we make tax law? How can we get agreement on some of the core principles cross-party so that you can then focus on how we might do it? And just to step away from tax for a moment, social care is a good example. We had cross-party support for the Dilnot report, which was a fantastic piece of work done by Andrew Dilnot, formerly of the IFS, that then got kicked into the long grass because it'll be difficult, because some people won't like it. So somehow you have to build the consensus to get the process right.
On a scale of 0 to 10, how much confidence does your reading of how similar these manifestos are to take you to we're on the brink of a breakout of cross-party consensus to solve it all?
-3.
Yeah. About that. Go on, Andy.
Yeah, I'll just come in on hypothecation. So, I mean, hypothecation is this idea, or at least strong hypothecation is the idea you say, we're going to take the whole of income tax and we're going to spend that on the NHS, not a penny more, not a penny less. I think most people agree that's a bad idea, in that you don't want your NHS spending to be going down in a recession, for example. But I actually think there's quite a lot in the idea of hypothecation in the kind of softer sense, and it reflects something kind of important about how we debate public policies, which is it's not only tax that matters in isolation. So it's reasonable for people to say, okay, we're going to do this tax, what are we going to spend it on? That's actually the right question to be asking in terms of public policy making, because we don't want to tie them forever together, but saying we're going to raise this tax so that we can spend it on something else, I think is actually a perfectly sensible thing for the public to be interested in debating.
Just as since we asked the tough criteria, so this hypothecation debate, yeah, so people get quite strong views about it, which I never quite understood. Have you ever met a tax rise proposed by a politician that wasn't hypothecated in the second sense? Like literally nobody in politics has ever proposed a tax rise that wasn't hypothecated. At a minimum, it's hypothecated to get the deficit down, and not very often, but like it's always hypothecated to something because they're not idiots. Right, one last question from anyone before we escape to the cold night. Is it about Brexit? Great, go ahead.
a missing point in all proposals. I'm thinking of the role of artificial intelligence in the administration of tax systems.
This is another small one.
So the question is, to what extent artificial intelligence should play a key role in the administration of the UK tax system in the future?
Okay, that's a great question. Right, this slightly comes to some of the kind of privacy, how much are we prepared to let the machine start doing it? Has anyone got views? Ian?
I mean, clearly there is a role for artificial intelligence in it, but one of the interesting things about it is it's really got to be intelligent. And the weakness of the tax administration, of the way it's developed, HMRC has developed very good ways of handling large businesses, which they can do because there are relatively few of them. And picking up Robert's point about call centres, it's been relatively poor at dealing with small taxpayers. And because it's been completely depersonalised. And now you can phone them up, and if the waiting period is longer than 20 minutes, you don't get to wait. You just get hung up on. And no, it's sort of, this is artificial unintelligence. Artificial intelligence needs to be used in a way that supports a more personalised service.
So what does that mean? What should we do with it?
What should we do with it?
What do you want your algorithm doing?
What do with it is enable HMRC to provide a service that looks personalised because it's using artificial intelligence in support to really channel the resources where the real problems are.
Okay. Anyone else want to come in on AI? It's going to solve everything, I'm told. Not so much. No. One last question, and then we're going to wrap up.
Well, I was going to talk about AI, actually. I think
we'll take that.
They're going to have to use AI to use the massive amount of data they're getting these days from all the different sources of information they have. And I think they are. They're going to have to, like all businesses are going to have to use AI to be intelligent in the way they operate. I mean, it'd be good to have non-artificial intelligence before we have artificial intelligence, but they're going to have to use those tools to be able to operate efficiently.
Okay, great. Andy, one last question to you.
I think before we get to HMRC using AI, we need to get to the point where HMRC can link much more basic levels of data than that.
For what it's worth, that was going to be my comment, not audits. I was going to say if you gave me £1 million, I would use it towards that way before.
In a shock move, the researchers in the room would like to spend £1 million on, quote, better data. Who would have thought? It's almost like there's a vested interest in the room. Right, on that happy note, that's not going to happen either. Can we thank our very large panel for today? All of you, enjoy paying your taxes, enjoy the freezing cold, enjoy the election.